What's up, fellow entrepreneurs? It's PK Patel from Midwest Corporate Credit, where funding your business is our business. Hey, I got a little story for you. Let's say you're hiking in the woods and you come to a fork in the path. You got two paths to choose from. Path number one is downhill, very little brush, and it seems like a clear path. Looks like a lot of people have gone down that path. Path number two is uphill. It's a little squiggly and there's a lot of brush in the way. Looks like a path less traveled. Which path are you most likely to choose? Number one or number two? Well, what if I told you a quarter mile down the road, path number one, the one that was downhill, is gonna lead you straight off a cliff, and path number two is gonna give you the best, most scenic view of the mountainside that you've ever seen? Well, you wouldn't pick path number two until I told you what's a quarter mile down. Well, guess what? Business funding is no different. Unfortunately, nobody tells you what's a quarter mile down except us at Midwest Corporate Credit. So today what I'm going to do is I'm going to break down different business lines of credit and some of the traps that you need to watch out for. Whether you go through our program or not, this video will add a lot of value to your business, making you well informed. So people often ask me, PK, how do you come up with the subject matter for your weekly videos? Well, the answer is easy. It's based on actual incidents that occur in our office and actual case studies of actual clients that are going through funding right now, or that we're going to go through funding, and the lessons that we learn based on those particular clients. So all the information that I give you is relevant and current. So here's what happened. I had a client named Andrew. He's got a medical supply company in Florida. He does about $1.4 million in sales every year and takes home about $265,000 in net profit. He was looking for $100,000 in order to expand his business. And he got an offer from a company that shall remain nameless. We're going to keep it classy, so we're not going to call anybody out or we're not going to slander anybody. But it's a company that is backed by a hedge fund that offers business lines of credit. And here's the offer that Andrew got. They offered him a $100,000 loan, and he has to pay back $120,000. And they gave him a 6-month term, and that 6 months equals 24 weeks, right? Well, what they did was they took the 24 weeks and they took 5 days a week, because you have 5 weekdays and 2 weekend days. So they took 24 weeks, 5 days a week, gives you 120 days. And what they did was they said, Andrew, we're going to charge you over a 120-day period. You have to pay on a daily basis. As a matter of fact, Andrew, you don't even have to make the payment. We'll just take it right out of your account. So Andrew said, okay, you know what? That sounds good. That sounds convenient. Well, unfortunately, if you do the math, the payment comes out to $1,000 a day. Guys, $1,000 a day, that's $20,000 on a monthly basis. That's preposterous. That's armed robbery. I mean, if he's making $265,000 in profit, he's barely profitable now. I mean, it's ridiculous. His profit margin shrinks significantly. Now, here's the alternative. Wait, before I go into the alternative, they call this a line of credit. The reason for calling this a line of credit, the company's justification is the fact that they give Andrew the privilege to re-up and borrow again at the same terms. I mean, my gosh, how did Andrew get so lucky? For those of you that didn't catch my sarcasm, well, it was a sarcastic remark. But anyways, they call this thing a line of credit. And quite frankly, being a business finance professional, I honestly think that this is deceptive and borderline dishonest. I mean, yes, the terms are there. You got to read the fine print. And that's the thing, is it's buyer beware, because business financing is the wild, wild west. And you have to do what's best for you, and you have to determine what the right choice is. So you got to read the fine print, and you got to be cognizant of what you're signing up for. Now, let's do a side-by-side comparison of what I was offering the client and what we ultimately ended up doing to bail him out of the previous situation that he signed up for. So what we're offering is a $100,000 business line of credit, and we're going to charge Andrew a $10,000 setup fee one time. Okay, so we're going to set this thing up for him. We'll charge him $10,000 as our fee, and then it's open forever. So Andrew gets to use this line as he pleases, and it comes with a 7% interest. Okay, which is a lot more reasonable. If you do the math on his other loan on this side, it's 20% interest. However, it's over a 6-month period. So if you annualize it, he's paying 40% interest on this side, and on this side, we're giving them an open line of credit with only a 7% interest rate. So what does that do to Andrew's payment? It brings it down to $583 per month, $583 as opposed to $20,000. I mean, guys, there's really no comparison. It's absolutely ridiculous, and it's mind-boggling. And I don't even know why people would sign up for a product like this unless they're absolutely desperate or in need of cash. And if that's the case, you probably shouldn't be signing up for that product to begin with, because it's just a downward spiral and it's going to exacerbate any financial distress that you're experiencing right now in the first place. So that's path number one. Path number one is the one that is downhill and is going to lead you straight off that cliff. Remember in the opening statement, there were 2 paths, and path number 2 is the one that's a little bit harder on the front end. The lenders that we choose are going to do a little more due diligence on your business. The credit requirements are a little more stringent. However, path number 2, once you get to about a quarter mile down, which is in this case, I mean, I'm getting all philosophical and using analogies, but when you get that quarter mile down, it's going to be a lot easier for you and your business, and the cash flow will be a lot more manageable. You borrow the same amount of money at a much lower payment and a much lower interest rate. So, I mean, what would you rather have, 40% or 7%? I mean, you got to do the math and do what's right for you. And here's the thing, whether you guys go through our program or not is irrelevant. I mean, I just want you to be well informed of what's out there, and I want you to make sure you're doing the math and making the choice that is not going to put your business in financial distress 3 to 6 months from now or a year from now. All right, so hopefully that helped. All right, guys, so like I said, whether you end up going through our program or not, I want you to have this information so you could do your due diligence the right way. So here's what I'm going to do. I'm going to give you 3 questions that you need to ask your lender or respective representative at whatever finance firm you're dealing with to make sure that you're getting a true line of credit product if that's what's being promised to you. So question number 1 is, are my payments going to be daily, weekly, or monthly? Okay, a lot of these finance companies on the secondary market, they like to do daily and weekly payments. Why? Because then they could get their money back quicker and put all the risk on you as a business owner and have minimal risk exposed for a minimum period of time. Okay, so watch out for daily and weekly payments. If it's going to be a true line of credit, you should have monthly payments with an actual interest rate assigned to it. Number 2, you want to ask them if you have a true interest rate or if you are liable to pay back the entire contracted amount, whether you pay it back within 2 weeks or whether it takes you the entire 6 months. So a lot of these companies are going to have a set contract. For example, if you borrow $100,000, you got to pay me back $120,000. I don't care whether you pay it back within 2 weeks or it takes you the entire 6-month term of this contract. You got to give me back $120,000. Now, that's not a set interest rate, so you want to be cognizant of that. Number 3 is, can I borrow my principal immediately after I pay it back? So if it's a true line of credit, let's say you borrow $100,000 and you have $100,000 available, and you tap the whole thing out, right? The next month, if you pay back $5,000 of it, you should have the $5,000 available to redraw for whatever emergencies that may come up. So watch out for that. Number 4 is, do I make my payment, or are you simply going to pluck it out of my account? Typically, if it's a reputable lender and if it's a true line of credit, they'll give you an option and send you some kind of a statement where you get to remit payment. If it's a company that's on the secondary market, they're going to automatically, they tend to have auto payments. They're called ACH payments, and they'll just pluck them out of your account, and you'll have no option of actually voluntarily making that payment. So those are the 4 questions that you need to ask them. What we're going to do is we're going to make this checklist and have it available to all of our viewers. The link to this checklist is going to be down in the description section. So click on that link and you can get your free list. If you've made it this far, maybe some of you are wondering, how do you work with us and sign up for this product here on the right side that I mentioned? Path number 2, the one that's a little bit more difficult to set up on the front end, but will give you the life of luxury for your business for the rest of eternity. Well, there's 3 requirements if you want to work with us. Number 1 is you need excellent credit, so 720 FICO score or above. Number 2, you have to be in business for at least 2 years. And number 3, we like to work with companies that have at least $350,000 in gross sales on an annual basis. So just 3 requirements, and what we'll do is we'll actually put that on the checklist as well. So if you want to download it, go ahead, download the free checklist. It'll have the requirements to go through our program and what you need in order to work with us and have us set up this product on your behalf. So that way you and your business can thrive. All right, my friend, that is all I have for you this week. But did you find this valuable? If you did, do a few things. Number 1, share it with a friend or a family member that is a business owner that could use this information. Number 2, give me a like. Don't be shy with those thumbs up, guys. Come on. Number 3, comment below and ask me any questions you have. And number 4, make sure you subscribe to this channel so that you don't miss the next one. And number 5, obviously, go get that free checklist. All right, so that's all I got for you. Thank you for watching. For Midwest Corporate Credit, I'm PK Patel.